We're live.
Good morning. We're returning to Senate Judiciary. We're taking up H-288, an act relating to liability for sale of alcoholic beverages. We'll change the pace from the last bill. So our first witness, I was going to go to the impact citizen first, but well, I know Kevin Gaffney's on a time crunch. So Commissioner, please, you're welcome. And
yep. And Mr. Chair, well, for the record, Kevin Gaffney, Commissioner, Department of Financial Regulation. I have a little time if you want to hear from the licensees first. I have testified in other committees.
Helpful to hear from the licensees and then the commissioner.
I think I have time. I'm basically, my window is till 11:30, so I have time.
Oh yeah, well, we have to be adjourned by 11:30.
Yep. I'll wait.
Then I'll go to Karen Jacobs, manager at Deli 126. Good morning.
Yeah. Hi.
Are you at Deli 126?
Yep, that's us. We're actually called the 126 now. We changed that legally recently. I'm actually the new owner, and this is my co-owner, Emily Morton.
Morning.
Morning.
So I'm a little unusual because where are you located, in Burlington?
Yep.
Yeah, see, I can't get there from Bennington.
Oh, yeah. A bit of a trek for sure.
I'm Dick Sears from Bennington County.
Tanya Vihovsky, Chittenden Central. So
Yes, thank you.
Burlington.
Nice to see you. Yeah,
Nice to see you too. One of my favorite bars in Burlington too.
thank you.
Oh,
They make excellent cocktails.
Thank you.
Bob Norris, Franklin District.
And Nader Hashim, Wyndham County.
Great, thank you.
please go ahead and tell us why we need 288.
Yes, thank you. So we have, well, first of all, thank you for having us. We're so happy to be continuing to be involved in this and continuing to share our story and as much as we can advocate for the greater service industry in the state here. We have shared a lot of details. We've had quite the tumultuous experience the last several months, and sort of to respect your time. We weren't planning on getting too much into the details. We're sort of going to try to focus specifically on the bill and sort of past our, we were able to open, obviously we were in the space. So sort of passing through a lot of our pre-opening struggles. Yeah, exactly. If that's okay with the committee.
Sure.
Great. So we did take over ownership finally, which was very exciting. We started to aim to buy the business and take back over last fall in October. We did start trying to obtain liquor liability insurance at that time. And then the end of January, so several months through that process, that's when we kept getting no's over and over again, despite about 25 applications being filled out for liquor liability insurance. End of January, we got the word, if you will, that we would not be able to get the level of liquor liability insurance that our landlord was requiring, as well as getting the news that it was Vermont as the whole that was undesirable. So us and our business model specifically would have worked in other states, but because we were in Vermont, we really got a hard no from the insurance companies for the level that our landlord was asking for. It's sort of important as well to understand in our kind of conversation here, the steps that you must take to get a liquor license in the state. And we're wondering if the committee would like us to clarify those points or if you've already talked about that.
I just want to note that Senator Baruth, who also represents Chittenden Central, has just joined us.
Okay, great. Hello.
So yeah, it might be helpful for us to understand the difficulty of getting a liquor license.
Perfect. Mm-hmm. So the main kind of thing that sets us bars and restaurants apart from your traditional small business in Vermont. Everyone has to get an LLC. Everyone has to, get their federal EIN number, sign up with the Secretary of State for taxes, all of those same things. When you are applying eventually for a liquor license, you must obtain both general liability insurance and liquor liability insurance and workers' compensation insurance. You have to have the liquor liability and the general liability to present to your landlord to prove obviously that you're covered. And there you need a lease. So they have to say yes and say, okay, great, you have those things. Here's your lease. You then have to get that lease along with your workers' compensation insurance and give both of those two documents with a lot of other things. But those, for the purposes of this conversation, are the important bits to the Department of Liquor and Lottery, and they can issue you the liquor license once you've had the proof of the lease and the proof of the workers' compensation. So the liquor liability really is instrumental in getting the liquor license. You don't need that policy, like technically the DLL doesn't need to see that, but you need that to get a lease. So it's sort of the chain of steps here. The two big issues that we ran into were all based on the liquor liability. So our landlords, it's important to understand that this business has been here for 5 years. So last week, actually, we just celebrated our 5-year anniversary. I've been here since the beginning under the previous owner. Karen's been here for about 3 years under the previous owner. So we've been established as a business. We have not had any liquor liability claims, no issues there, no claims in our insurance. So we came into this as an upstanding business and as two new woman business owners who obviously also had a clean record, et cetera. So
we were optimistic.
we're optimistic, exactly. And we had an established relationship with our landlord. Our landlord had the policy for the per occurrence. So when you have insurance, you have a per occurrence, you have an aggregate, and you have a what's the third one? I'm so sorry.
Per occurrence, aggregate,
And
per person.
and per person. I'm so sorry. So the per occurrence level per our lease had to be $1 million. So that is the top of the chain for the most amount of insurance that you could ask for. And our landlords required that level of insurance. We were told that because basically of the climate that we are in currently in sort of this insurance crisis in the whole country, and Vermont's ISO rating being so high. So it's us and Alabama that have the two highest, which is a 10 ISO rating, which basically means we are the two least desirable states for the liquor insurance companies to work with. So we are sort of so far down the line that getting $1 million was basically out of the question. The previous owner had obviously a policy 5 years ago, pre-COVID. There was a deli associated. Obviously, our previous name was Deli 126. There was an actual deli associated. So the sales and the business plan were a bit different than it is now. Now we're much more focused on the bar itself and the music aspect of it. So 5 years ago, getting $1 million policy wasn't out of the question. For us, the $1 million policy absolutely was out of the question. And the big feedback from our landlord when we brought to them this whole statewide issue was that they had to protect themselves, which completely makes sense, but there in no way was wiggle room from their side. So we, about mid-January, we had only gotten one policy at that point. So about 3 months of trying, and it was for half. It was for $500,000. And that was,
We brought that to the
and we brought that to the landlord, and they said, absolutely not. Strong armed, had to be $1 million.
So we considered not opening.
Exactly. So there was a good week there that we heard from the landlord, if you can't get that, we're going to need you to vacate the building, which meant no business, no space. We just bought this business for nothing, basically, and would have to shut the doors and also not continue on with our professional partnership. So that obviously was a very rough week. And when we spoke to the House Judiciary Committee, we were right in the middle of that. So that was a very interesting time to first be speaking with all of you lovely legislators. We were able with our insurance agent over in Essex, Vermont, they were able to negotiate for us just that per occurrence amount, $1 million. So we still have lower liability per person in the aggregate, but that per occurrence, he was able to advocate for us. We've obviously had to pay for that financially. We're paying a little over double what the previous owner was paying.
For the exact same policy.
Exactly. Well, for less policy, the exact same occurrence, but we have less coverage for the other two. We were quoted at one point,
During that sad week.
yes, during that very sad week, we were quoted that if we were to get a $1 million policy, if that even in some realm, Vermont were to, we were to get that policy as a Vermont company, it would be closer to $80,000. So just to put that in perspective, 6.5 times as much as what the previous owner was paying, which for us just would have, there's no way the business could have afforded that. And we're finding that a lot of other bars in the state have been dealing with that side of it, that we really don't think you're going to get the policy, but if for some reason you could, it would be this outrageously large amount of money, which Vermont businesses, or bars at least, I don't know any of us that can afford a policy that's 6.5 times what we paid previous years. Do you want to talk about move on to
Yeah, what
Yep.
this would do, what the bill would do, bring it back to the bill.
so the bill itself, obviously our biggest issue was the issue with the landlord.
Yeah.
We could have done, we did everything we possibly could do, honestly, to try to work around that, to try to work with them. We tried changing our business plan. We did everything. And it just kept coming back to the landlord that if we were to stay in this space or stay in any space that's owned, that we wouldn't own the building ourselves. So that was a leased building, we would be expected to reach whatever level that landlord was asking for of that insurance.
Which is why we
Right.
didn't pick up and go try and find another space.
Exactly. So when we were in that awful week, and sort of looking at, okay, can we try to move this business? Same thing, rest of Burlington, that $1 million, no questions asked, which makes sense from their perspective that
That's
they would
their
want to get
loss.
covered. Exactly. Because we are a joint in several states, so they can get sued just as much as we could, as our bartenders could, as anybody else in that chain of serving somebody or over serving somebody and having them get into an accident or something. As the law stands in the dram shop right now, the landlord is liable, and we understand why they need to sort of strong arm this. It just, from a perspective of a small business, they are now dictating completely, and could potentially discriminate against bars and restaurants. So because it's completely on their decision right now, as the current law stands, we really have no control over it. And it's up to the landlord to say, well, we really don't want bars, or we really don't want restaurants. And for us, obviously, we're in the service industry, and the notion that all landlords would no longer cover, or allow bars or restaurants to be tenants is really challenging, because it puts a lot of power on the landlord and a lot of dictation on them. The important part about that, however, again, more asterisks in this whole process, is that they already are covered. They aren't necessarily even outstanding of the liquor liability that we would pull. And even if we, in our policy, we name them as an additionally insured in our liquor liability policy, but even completely separate of that, their general liability that they have as a building owner in this state already holds them responsible, or they're held responsible, and they are covered by any tenant. It doesn't matter what type of tenant they are. So to also include them now and have them have to hold this extra liquor liability is sort of redundant. And that's where it becomes very complicated. And that's where we understand that it it's even more layers.
That's where this bill would come in, because the bill, what to our understanding, would take the landlord out of this. And like she's saying, they're already involved in it, so that's why that's redundant, but it would make us more desirable to these insurance companies, where we would be able to say, like that first policy that we received, that 500, we could have taken that, and yes, we could have had lower liability, but that would be our decision, and we could have worked towards getting that higher insurance premium when it was more desirable to us and we can afford it, and all those decisions would have been in our hands rather than the landlord's.
Correct. And that in our story specifically, we would have been open many months earlier than we would. We wouldn't have
Lost the business.
lost the
of it.
business potentially. So it's been really challenging to be in this process. And again, we're very happy to be involved. And we were very much the flag wavers in the beginning of, hey, this could be a huge issue if it's true, that affects the whole state. And it very much is true. And you're seeing it in front of you, that something really has to be done about it. But
To clear it all up, the
Yeah.
reason why we continue to fight this is because currently we are open and we're affording the policy that we have. Looking down the line, we don't know if that's going to continue to be able to sustain, because if something doesn't change, we see the market as just continuing to increase, and we eventually will not be able to afford the premiums that are being presented to us.
And we had the luxury that we have an early in the year. So now we're covered until next March. There's bars all over the state that even right now are up for renewal and can't get a renewal. Or if they can, again, it's that like huge policy. And that's just going to keep going on. There's folks, in September, October, November that know this is coming, that are trying to get policies and can't.
We were featured in 7 Days about what was going on this stuff. A few of us who are going to speak now, and we've personally been reached out to by a few restaurants and bars that have told us they're in the same spot. And all we can do is give them our insurance broker's name, because really, he was the superhero in our story that advocated for us and figured it out with our budget and figured it out how we could get open. So we don't have the answers for people. We think this bill is going to make an effect, and that's why we're here. That's our
Senator?
story.
Yeah.
Senator Zahara,
There's-
you have-
There's
Yeah,
a-
and you may not know the answer to this question. This may actually be a question for for legislative counsel that is not in the room, but the requirement to have liquor liability is being required by the landlord, not Vermont law, correct?
That's a yes and no answer. Yes, it's required by the landlord. But because you need the lease to get the liquor license, it is technically also required by the state. It's not listed in the like list of things you need to get a liquor license, but you need to get the lease, and the lease is on that list. So it's kind of a yes and no answer to that question, unfortunately.
Yeah, that's essentially correct. So it becomes.
Could you identify
Sorry,
yourself?
Charles Martin, Department of Liquor and Lottery. So it does become for many people a practical requirement, but DLL does not specifically require you to have liquor liability insurance unless you've been suspended by us in the past.
Mhm.
So you've done something to be seen to be a bad actor in the past. But for normal folks trying to obtain licenses,
Okay.
I need help in understanding the problem, and either the witnesses or you can. I haven't heard from anybody in Southern Vermont that this is a problem.
Oh.
And I do know very well, and he contacts me frequently, and he's a friend, who owns a number of those bars and restaurants and things like that all around Bennington County. But he owns the property. Does that make it different? Because he owns the buildings?
that may not be sufficient for us to-
Are you, Mr. Carr? Okay, yeah.
If you own this building, you wouldn't have a problem.
That's definitely a question for Chris Carr, who's on mute right now. He's in that
Okay.
situation. We unfortunately can't speak to that because we're going through the lease process, not the ownership process. It's our understanding that it is different, but Chris can absolutely speak to that.
Okay, well, he's on after Alex Carruthers, but we
Okay.
can. So we're gonna
I had just a quick follow-up
Yeah.
question to my first question. There's nothing in this bill that would prevent landlords from continuing to mandate high policies, even if we change the law, correct?
It's
And
our,
again, maybe not a question for you, but
Yeah,
I'm just,
it's
it's a
our,
landlord's choice if they make that requirement of the lease, whether or not we pass this bill, yes?
right. Yeah, it's our
Okay.
understanding, yes, but it's also our understanding that with them being removed from so much liability, from sort of the chain of who could get sued, if there is like a drunk driving incident or something like that, with them being removed from that chain, it's our understanding that the pressure from their insurance companies would also go down. So again,
Okay.
it's sort of that yes and no. Obviously, if they want to keep that high policy, and we hold ourselves and our business to a standard, just like other bars hold to different standards. It's the same situation of like, they might still want that, but hypothetically, if all of the liability and the chain of liability is sort of that dial is turned a little down, they'll get less pressure from their folks, and they potentially will be less invested in those high policies. So yes, but also no. Again, unfortunately, I'm sorry to keep having that
okay.
answer. Yeah.
So frequently, these things are about as clear as mud, so thank you.
Yeah. Okay. Yeah.
Thank you very much. We appreciate the testimony. I think next we're gonna go to Alex Carruthers.
Yes, sure. Thank you so much.
Alex.
I believe Alex submitted written testimony, he's not available.
Oh,
Yes,
okay.
So that's.
Then next, we're gonna go up to Chris Carr, owner of the Pickle Barrel.
Great. Oop, I think I'm there. Can you hear me
Good
okay?
morning.
Good morning. Thank you very much, and I appreciate your time today. I'm sorry I'm not in person, but my business has called for me to be down here, so I wanted to make sure I spoke to you today and hit a few subjects, and then I can get back to work. So thank you. My name is Chris Carr, and I kind of have a long history of serving alcohol and food in the state of Vermont. I arrived here in 1981, and I won't bore you with all the history, but I was fortunate enough to come to the town of Killington and fell in love with Vermont as well. And I currently own four establishments down here, bars and restaurants that serve alcohol, as well as so I have first and third class licenses, and I also own second class license as well, and a convenience store. I'm going to go back in my history a little bit because I want you to understand my operations, and then we'll get to the dilemma that we have in front of us. My history is such as in the late 90s, there was a lieutenant that ran the barracks in Rutland, and he basically came up to our businesses on the Killington Road and said, "You guys need to curb drinking and driving, or I'm going to make life tough for you." And I took that to heart, and I kind of came up with a different angle of how I was going to operate my businesses from a defensive standpoint moving forward. And my goal was to have customer service, but reduce my liability and exposure. And taking the words from Lieutenant Stanton, I moved on, and we created the first free shuttle service up here, which took patrons to and from our bar free of charge. Since that point, it's been operating over 20 years. We've expanded our fleet to 4 15-passenger vans, and our goal is to obviously not have any people drinking and driving, and to have safety for all and matter. The campaign has been hard about do not drink and drive. We have worked very hard with that. We've actually, we have a great staff that's well-trained, so well-trained that they've actually conducted courses for the DLL in the past, with refusal skill training course that they created for them. We've taken our business models even further. We've come up with a drink more water campaign where we actually give out free bottled water in the club. This year alone, I've gone through already since January 1st, 2,000 cases of bottled water. So we're actually encouraging our customers to drink more water. Beyond that, from our defensive point, we also do not go to last call. We close our operations at 1 o'clock when we don't go to legal hours. We do that for safety purposes. We just don't believe it's needed. I've successfully operated in Vermont for, as I said, for many years. This past fall, I was served notice by my insurance carrier that I've had for 7 years that they would no longer be writing coverage in the state of Vermont that would cover us for dram shop liability. My agent has worked tirelessly on this, trying to find coverage for us, and had found nothing when I last testified with the House. In fact, some of the brokers came back and the quote was not in Vermont. Okay. One broker went as far to say, if you were just over the border in New Hampshire, we would gladly write coverage. And so that's kind of tough to take in the teeth on that one. I started this in 2020 with Alex Crothers, who wasn't able to speak today, but Alex and I actually got together with the VTIR, which is an offshoot of the Vermont Chamber. And we got together, and what we started was we wanted to get a better rate for Vermont for liquor liability. The rates that we pay are astronomically high, as you have been told by our ISO rating. My plan kind of changed. I went from trying to get a better rate to actually just trying to find coverage. Taking it back a little in history on you, in 2019, which I think is a fairer number to compare, when the last time our sales were strong and we were not involved with any pandemic, since that point, my rate for liquor liability has more than doubled, and I paid it. Since I first testified to the House on this, they did find a company that was willing to write coverage in Vermont. To have the same coverage, I would be paying 3 times the premium that I'm paying currently, which, as I said, is double from what it was in 2019. Companies are just not interested in writing in Vermont. And the goal here, I believe, as we come before you, is I believe that bars and restaurants should have dram shop liability. But when the coverage gets to the point where it's cost prohibitive, we are not ensuring the public safety or the assets that need to be insured at that time period. And I believe when we look at the ISO ratings, as the girl spoke before, we have an ISO rating of 10. Yet when you look at the state of Vermont, and we often compare ourselves, and they compare ourselves to us as well, New Hampshire, their ISO rating is a 7. And you go further east and they have an ISO rating of 4. And when we look at things, the states are very similar. We have rural areas, we have city areas, everything else, but it's a shame that we're not on that basis. And I truly believe we need to get to a point where the bars and taverns in this state can have liquor liability. The cost of it right now is astronomical from this one company that was willing to potentially look at it. That's not even a guarantee. But I think that if we were able to create a market which insurance companies wish to come here and write, we will be better serving the public and the bars at hand.
Thank you, Mr. Carr. Thank you. I wanted to point to, on our webpage is Mr. Carruthers' testimony, which really explains well what you were talking about the dram shop law and how it affects I never knew there was an ISO rating, to be honest with you.
Mm-hmm.
But I was surprised that Maine is a 4 and Vermont is a 10. And so that's what's affecting your liability insurance, even though you own your buildings.
I own my buildings, and to go back to what was spoken about earlier, the landlords will require, okay, and often do, that they are covered under a dram shop policy. So what we're trying, but that is written into the statute currently, that in the event of a dram shop action, the landlord can be held responsible. Okay. And I think that's the bigger trigger point there that is cropping up. And we've done a lot of research in going through what the other states are offering, how their statute is written about it. And ours is pretty tough. And it has never been looked at or modified since its inception back in 1987, I believe. Don't quote me on that, though.
Thank you. Thank you very much. I wonder, as Kevin Gaffney, the Commissioner of Department of Financial Regulation, available. Please go ahead. You've heard some testimony.
Thank you. I'll just restate for the record, Kevin Gaffney, Commissioner, Department of Financial Regulation. And thank you, committee and Mr. Chair. It was helpful to hear that testimony. And I have a few kind of reflections on that, but I think I'll first talk about, because you've heard a couple of different statements by the licensees. One, the longstanding law, it hasn't changed, and that's true. It's a longstanding law. And even the other comment by the first set of witnesses that they were 5 years claims free and things are changing. And, for the committee's education, I don't know if I've discussed this in the past, but we are in the midst of what is called a hard market. And a hard market typically means that pricing for insurance risk goes up. The reason the pricing goes up is because the capacity in the insurance marketplace is going down. And what I mean by that is insurance companies also have to have a backstop. So they utilize reinsurance. And the reinsurance marketplace has contracted dramatically just in the last year and a half to 2 years. It either contracts in terms of what capacity. What I mean by capacity is how much insurance they'll provide and or the pricing of that. So it's less insurance available for double or more of the price. So what happens there is, for some companies, because this is voluntary coverage, they choose to either participate in a market or not. And in the hard markets, you're going to have fewer participants. And that's where we're at right now. So just generally wanted to level set on what's happening in the insurance marketplace. That's not just liquor liability, that's commercial insurance too. But where it really has an amplified effect is liquor liability is a higher risk slice of the commercial marketplace. The other thing I was hearing from the witnesses, and it is a component of this bill that I think is meaningful, is the extraction of landlord liability. I think there was a question about that there isn't an insurance requirement now, and this bill would promulgate rules, and we would collaborate and with the Department of Liquor and Lottery to establish rules for insurance requirements. But the practical fact is there is an insurance requirement, because most of these establishments are leasing the space. So the landlords are requiring that because the landlords are exposed. And Mr. Chair, you mentioned that you weren't aware that ISO has a rating. I'll just clarify what it is. ISO does have a state grade for each state. The scale is 1 to 10. So the most favorable market is 1 and the least favorable is 10. Vermont and Alabama are both a 10. The predominant reason that Vermont is a 10 is that it is a strict joint and several liability standard that exists. The bill does move directionally towards a negligence standard. It doesn't move completely towards a negligence standard. And I will just say that that the insurance marketplace is going to look at the future. They're going to look at um, what is known and what is still unknown. And so the unknown part is there's still strict liability standards. There's still carve outs for minors and after hours. So just understand that if the committee's goal is to, in this bill, is to establish something that still provides substantive protection for the public, but also provides the ability for licensees and business owners to do business here in Vermont, that it isn't going to end up likely with a state grade that's similar to our neighbors to the east, where they have a fairly strict negligence standard. One of those states has a cap, but I really feel like the negligence standard that has been crafted in part could be just more consistent throughout the bill versus having carve-outs. The other thing that I heard from one of the licensees that is always an important component is, and the insurance companies look at this, is what risk mitigation measures does a licensee take? So it was good to hear just different practices to mitigate risk and mitigate loss. Those are always things that are going to be looked favorably on by the insurance companies. Those are sometimes things that they engage with. So when one of the licensees talked about their broker working diligently, sometimes part of that pricing and the acquisition of coverage comes with some other practices that go in place to mitigate loss. So the bill is moving in the right direction. The marketplace is clearly contracted. I don't see this as a short-term issue either. I think there's a number of other issues at place in the commercial marketplace that we will be in this condition for a long period of time. The basic thing you need to understand is that Vermont's laws, and you heard it, will write you over the border in New Hampshire, but not here in Vermont. These companies write in many states. They either write regionally or they write throughout the country. And when you're hearing that, that is the reality of the marketplace. It is. Now, I'm not the expert on liquor licensees and their needs and demands, but what we didn't want to craft in the bill was anything that created or maintained any barriers that currently exist for licensees and business owners to do business in Vermont. So I think there are some clear hurdles in the current law. The bill is trying to address some of those. We actually provided a state-by-state comparison chart. I don't think we sent it to the committee yet. We did send it to House Judiciary.
She just sent it to me and I just forwarded it to you guys and I'm gonna post it.
Okay. And I would just say we took some time and my staff, I think, did a good job of laying out the comparisons between the states. And you can certainly look at those comparisons. I think it lays out some of the things I'm talking about where we've moved directionally to where, and I can't speak for ISO, but I would think they would look favorably on some of the changes. But the certainty or lack of a certainty that still exists with having not a negligence standard throughout is still going to be an issue. And the challenge, the reality and the challenge, and one of the licensees talked about it, renewals happen every month. Every business has different renewals based on when they establish their insurance programs. What I would hate to see is a missed opportunity. Like if come the fall, there's a number of renewals that are having difficulty securing coverage. I just don't want to have a missed opportunity to make sure we can do what we can to make a marketplace available, affordable, and still protect the public. Yes.
Thank you. I want to preface this by saying that I am not opposed to this bill. I do wonder, though, what impact the size of Vermont has on whether or not insurance companies want to insure here. We're just a small market. Do we have any sense of what, if any, impact that has?
I think of the companies that write business, they don't write just in Vermont. They write in all these states. So I think, is Vermont a smaller market? Of course. But Vermont's also a smaller market for auto insurance and homeowners insurance. And our market is very competitive with those states. Actually, Vermont's rates are, lower than one of those states and very close to Maine's. So it's more about the legal landscape than the size of the market. I think the size, because you remember the size of the market, the companies don't just look at their bottom line in one particular state. They look at their kind of aggregate bottom line and the ability to do business. Where it does change is when the legal landscape provides higher exposure and the market is small. I guess those are certainly a combination factor that would be less desirable, right?
Thank you.
Other questions for the commissioner? Commissioner, thank you so much. I'm gonna get you
My
out
pleasure.
Get you out 5 minutes before you need to leave.
Good seeing you all. Take care now.
Thank you all very much and move